The cannabis industry has grown rapidly, with legal markets expanding and consumer demand increasing each year. However, despite its growth and profitability potential, financing a cannabis business remains significantly more challenging than in most traditional industries. Entrepreneurs entering the space quickly discover that access to banking services, loans, and investment capital is limited and often expensive. One of the biggest obstacles facing cannabis businesses is the disconnect between state-level legalization and federal law. In many regions, cannabis is legal for medical or recreational use, yet remains restricted under federal regulations. Because banks operate under federal oversight, many major financial institutions choose to avoid working with cannabis-related companies altogether. This hesitation exists even when businesses are fully licensed and compliant with local laws. As a result, many cannabis companies struggle to access basic financial services. Opening a business bank account, processing electronic payments, or securing merchant services can be difficult or impossible. Without these tools, everyday operations become more complicated. Paying employees, managing supplier relationships, and handling taxes require additional time and resources, creating inefficiencies that most other industries do not face. Another major challenge is the industry's reliance on cash. When businesses are unable to access traditional banking systems, they are often forced to operate largely in cash. Cash-heavy operations bring significant risks, including theft, fraud, and security concerns. Businesses must invest in safes, security systems, and specialized cash handling procedures, all of which increase operational costs and exposure to risk. Securing loans and credit is another major hurdle. Most cannabis businesses cannot rely on standard business loans, credit lines, or commercial mortgages. Traditional lenders are reluctant to provide financing due to regulatory uncertainty and the inability to use cannabis inventory as collateral. Without access to affordable credit, businesses find it harder to expand, upgrade equipment, hire staff, or survive slow periods. Because traditional financing options are limited, cannabis companies often turn to alternative funding sources. These include private investors, venture capital firms, or specialized lenders that focus on high-risk industries. While these options can provide necessary capital, they often come with high interest rates, strict repayment terms, or demands for significant ownership stakes. This can limit long-term growth and reduce founders' control over their businesses. Compliance costs further complicate the financial picture. Cannabis companies are subject to strict regulations that require detailed reporting, audits, and monitoring. Financial institutions that do choose to work with cannabis clients often charge higher fees to cover compliance expenses. These added costs can place smaller operators at a disadvantage and reduce profit margins. The uncertainty surrounding future regulations also affects investor confidence. Many traditional investors hesitate to enter the cannabis space due to the lack of consistent national policy. Until regulatory clarity improves, the industry will continue to rely on smaller financial institutions and alternative funding models. In contrast to traditional industries where banking and financing are straightforward, cannabis businesses must navigate a complex financial landscape. Until broader legal reforms take place, access to banking and capital will remain one of the industry's biggest challenges.